Hello and welcome to the Port Technology Newscast. In this edition we have all the latest breaking news and two exclusive interviews with Olaf Merk of the OECD and Senior Analyst at Drewry Maritime Research, Neil Davidson.
The biggest stories of this week. Shipping remains in turbulent waters after Japanese carrier MOL forecast a loss of $1.5 billion for the 2015-16 financial year. MOL said in a statement, "We expect to record an extraordinary loss in the fourth quarter of this fiscal year due to costs for the business, structural reforms, including disposal of vessels in the dry bulk and container ship businesses."
In a bid to take advantage of the recent sanction lift and boost its presence in Iran, the world's third largest shipping company, CMA CGM, has signed an agreement with the Islamic Republic of Iran shipping lines, which will see both companies jointly operating routes and container terminals, as well as sharing vessel capacity. CMA CGM said the progressive lifting of sanctions should bring strong growth in trade between Iran and the rest of the world. This agreement opens up new opportunities for CMA CGM to expand in this region. Richard recently spoke to Administrator in Ports and Shipping at the International Transport Forum at the OECD, Olaf Merk, about how ports and shipping lines can work together more efficiently.
Hi Olaf, thank you for coming into the Port Technology Studios today. I was hoping you could explain for me how you think ports and shipping lines can better collaborate.
The collaboration between carriers, terminals and ports is of the utmost important. I think this is where the real productivity gains can be achieved right now. So this is very important. How to achieve this? Well, I think it's to start getting out of the silos. That would be the first thing. There's still a lot of silos going on. The second thing is that cooperation that needs to be built up will also build a relation of trust, and I think that is very important. And then a third element is maybe incentives, to build more incentives into certain arrangements, for example in tariff structures, so that doing more is actually also giving a reward.
India's 12 largest nationalised ports are to receive $2.1 billion of investment in the fiscal year 2015-16, which will effectively add a new capacity of 162 million tonnes per annum to India. The Indian Ministry of Shipping said the focus is on improving the existing port infrastructure, modernisation of existing facilities and increasing our port capacity, adding that the goal is to bring the 12 largest ports in India to an international standard.
Spot market container freight rate volatility intensified in 2015, and Drewry Maritime Advisors has released its latest Container Insight report, which looks at the likelihood that freight rates will continue to decline. Some of 2015's rate erosion and volatility was linked to falling oil prices, but it was also a consequence of the ever-widening gaps between supply and demand. Overcapacity has become a huge issue in port and shipping sectors, so Richard recently quizzed Senior Analyst at Drewry, Neil Davidson, to find out what ports and terminals can do to mitigate the problem.
Can you name 3 ways in which ports and terminals can better handle large capacities?
One of the ways you can do it, of course, is by pouring more concrete and putting more equipment in place, but you don't want to do that until you have to. So the more significant ways without doing that are things like reducing the dwell time to free up space in the yard, trying to smooth out those peaks in volumes that the bigger ships result in, although that's very difficult to achieve. And then thirdly, working with the carriers more on stowage plans to try and optimise the handling of the ships when they do come.
And that's all for this edition. Make sure you watch the next instalment, and in the meantime you can keep up to date with all of the very latest news on the Port Technology website.
Thanks for watching. Goodbye.
Goodbye.